We're half an hour away from the open in Hong Kong, Shenzhen, Shanghai. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Let's get to your top stories today. Donald Trump's call with President Xi Jinping boosting market sentiment as you can see Asian stocks rising ahead of his inauguration. And later on in the show, we'll take a deep dive into U.S.-China relations with the German Marshall Fund's Bonnie Glaser and Taihe Institute's Einar Tangen.
The president-elect is reiterating plans for a flurry of executive orders on his first day in office, declaring an end to what he calls years of American decline.
And TikTok restores service in the U.S. It's after Donald Trump said he would halt the enforcement of a ban to give ByteDance more time to find a buyer. Good Monday morning. Just straight to some breaking news right now. The loan prime rates out of China, 1 and 5 year, both unchanged. The one is still at 3.1%. And the longer tenor, 5 year, which is effectively where most mortgages are tied in benchmark to, unchanged here at 3.6%. I'll leave it there for now. Bill, market check, please.
Yeah, well, I think that's for a third straight month there, no move. But in terms of what we're seeing in the session today, keeping an eye on what's happening with the offshore yuan there, but also what we're seeing for futures ahead of the open, because if we take a look at where the Golden Dragon Index closed on Friday, that was a very significant jump there of around 3% or just over. What really drove that, and one of the big factors down to that, was this call that was held between President Xi and Trump ahead of his inauguration on Monday. You can see that the last close for the Golden Dragon Index, and that put a lot of optimism into the markets. That is also translating across when we take a look at how Asian equities are trading in the session so far today. We've actually just come off the best week for global stocks in a matter of months, or a couple of months. Here, though, you are seeing again that feeding into the Monday session so far. Particular gains for the Nikkei 225, up 1.1% now. Bond futures there to note as well in treasuries, because we do have US market shut for an extended holiday break, but that there sets the tone. One of the other particular things they're watching out of this, perhaps a bit of improvement in the US-China relationship, is the Aussie miners. That's what's leading the ASX 200 higher in the session so far. But I was as well, Dave, and we were just talking about this. There has been a tropical cyclone off the coast of Western Australia that has been a potential disruptor to iron ore exports. But still, one of the things we do track, again, on that US-China relationship.
Yeah, I mean, absolutely. And I think there's a really great overlap between what you just mentioned there and perhaps what's going on in the metal space. And I think that's really one of the areas that the market will be tracking today, given what 5, 6, even 7 days of gains across the likes of copper, aluminum, iron ore, for example. As a whole, the Bloomberg Industrial Metals Index is actually now at 10-week highs. Imagine that. Okay, going into the session today, Tencent, we had this upgrade coming out of Morgan Stanley on their ADRs. Watch shares very closely today. More on the TikTok story in a moment here. In terms of jobs numbers coming through, that's out of Hong Kong later today. That's typically after the market close. And of course, going into the open today, we're still watching what happens in the CGB space. And related to that, how high repo rates have actually gotten so far. So certainly one part of the rates market you want to pay attention to very closely as we make our way closer to the Lunar New Year, Bill.
All right, big focus, of course, we are on the day of the inauguration, and US President-elect Donald Trump is planning an assertive start to his second term. Addressing supporters at a rally ahead of that inauguration, he's pledged the most aggressive and sweeping border measures while reiterating his tariff and tax plans. Let's get more with our senior editor, Derek Wallbank, joining us now, along with our chief North Asia correspondent, Stephen Engel. And Derek, we'll start with you, because this call, and we were just discussing that, I mean, we saw the big market reaction. The readouts, though, were slightly different on both sides, but what were the key takeaways?
Well, look, I think the key takeaway is a temperature check, right? That has been the big question that has been on a lot of people's minds as it comes to Trump 2.0 and China, right? There's a desire so far to be in a kind of, let's call it, negotiating phase here. And you can see that play out in a number of different ways. The first of which is that Donald Trump is expected to give some sort of a reprieve for TikTok. He has talked positively about the social media network. He has millions of followers and people, he's gotten tons of views, and he credits it in part with his success reaching out to younger voters in the campaign. So you should watch for that. There will be a flurry flurry of executive orders on day one we are expecting for Donald Trump. This could be anything from immigration, it could be energy increases, you could be talking about changes for federal workforce, getting back to 5 days a week in the office, reducing diversity initiatives across the federal government, whole range of different things that Trump has been talking about. I don't think there should be too much surprise in terms of the macro level of that, but it'll be interesting to sort of see kind of how much he's going in on each of those things initially. I think really from that kind of China perspective, the one thing that I would highlight is it will be really useful to see exactly how far he goes on tariffs on day one. Does he hold off on China tariffs specifically that were promised? Does he go with just global things but nothing specific to China? Like, where does Trump wind up landing there? So how much space is he preserving there? I think that's going to be a key thing. Now, time-wise, I'll wrap with this. Time-wise, Donald Trump is sworn in ballpark noon Washington time. So that's 1 o'clock in the morning Hong Kong, which means that by the time that Asia is waking up tomorrow, we may have a pretty good sense of answers to some of these questions.
Yeah, and some of our team are already, in fact, awake at that point in time. That's Inside Baseball. Steve, let me bring you in on day one to the point that Derek was just making there. Potentially, based on what the president-elect has said, an executive order on TikTok.
Now, 24 hours from now, we will not know the fate of TikTok. We do know the immediate fate of TikTok because they had a whipsaw weekend, definitely, after the Supreme Court unanimously essentially backed the law that was signed on a bipartisan bill back in April, signed by Biden, and basically gave TikTok until this Sunday, yesterday, to divest its stake and to find a U.S. buyer, otherwise go dark. And they did go dark. Yeah. They went off the App Store on Apple and other platforms where it was available late Saturday, but it's back up now. Now, that's that whipsaw because Donald Trump, even before he's been inaugurated and taken over his second term, has said he would day one, and that's coming very soon, as Derek Wallbank just said, at 1 o'clock Hong Kong time. This could be his first action. Of all the big stresses in the world, this could be his first executive action, essentially to give 90 days reprieve to find a buyer. But he's actually taken it a step further. He's saying not a complete divestiture. It could be a joint venture 50-50. Now, people in his own party, including the House Speaker Mike Johnson, as well as the Senate Intelligence Chair Tom Cotton, also Republicans, say, no, you can't do this. You need to be able to come to Congress and explain, do we have a buyer in the works? Is this already, are the papers already in motion? All this to get certified by Congress, because he still needs to have that extension. He needs to have that certified. And again, 50-50 joint venture is not part of the law. So, again, there's a lot of explaining to do.
Yeah, that's right. As you say, it's not really even sure if they've met their requirements to extend that deadline. But, I mean, we know that Trump has sort of had this about turn, and he's sort of crediting part of that to the youth vote. Yes. And that apparently helped him get elected, but through TikTok. But is there something else at play here?
I guess it's the value of the company and the enterprise in the United States, and the megaphone aspect of TikTok has been so loud, if you will. And there's been other services like Xiaohongshu that have come up as a hedge. Oh, well, if TikTok's going away, maybe we go to Red Note, as it's known in the United States. Well, let me not put Trump's words to actions. Let's hear from Donald Trump. This is what he had to say, why he's thinking about this extension on day one.
If you don't approve, they're out of business, they're worth nothing. If you do approve, they're worth like $1 trillion. They're worth some crazy number. So I said, I'll approve, but let the United States of America own 50% of TikTok.
Well, interestingly, the incoming National Security Advisor, Mike Waltz, has already said that we all know that she and Trump have already talked, but they've essentially agreed to work together to find a solution to this.
Derek, final words from you, as Steve was pointing out, of the many, fractures and stresses across the world. TikTok is just one of hopefully the many other things that the U.S. president will tackle on day one and week one. What other things do you think we should be paying attention to here?
Well, look, I think one of the biggest things I'm paying attention to is what Donald Trump does kind of close to home in foreign policy. I want to see what he's doing with Canada. I want to see what he's doing with Mexico. Now, I mentioned the deportations aspect. That is something that Trump is expected to launch right into and start those up. But to what degree, that remains to be seen. Remember, Trump was talking about 25% tariffs on Canada and Mexico. Those are both free trade allies of the United States. That's going to be a real big issue if that actually goes through. Canada's ready to retaliatory tariffs there, and we've already seen political instability caused in part by Trump and an emerging campaign to replace Justin Trudeau that is forming in part around how do you respond to Donald Trump for 4 years, right? So Trump has this effect, as we've seen kind of across the world, to kind of wade into something and have, if he wants to have it, a pretty substantial destabilizing effect. What does that look like? Further, with some of those allies, you know, the United Kingdom is one, Germany is another. They've been trying to figure out how to play in a Trump space. They haven't quite figured it out yet, and there are, you know, substantial signs that Trump is closer to some groups that are in opposition than maybe to some who are in the majority and in government, and that winds up creating a difficulty for all sorts of reasons. So that's one of the things I'm really looking forward to getting some clarity on. You know, that we're hearing talks of astounding numbers of executive actions of some degrees, 100, maybe 200 or so. Some of those will be minor. Some of those will be setting a path for future actions. Some of those will be part of this sort of shock and awe blitz. But make no mistake, Donald Trump was at a campaign-style rally in Washington, D.C. earlier today, promising that on day one, America would be great again. That is what he said he's going to do. He's had 4 years out of office to figure out how to get this stuff done. And you should expect a Donald Trump who knows what he's doing, knows how to operate the federal bureaucracy, who has a Republican House, a Republican Senate, and a Republican 6-3 majority in terms of appointments on the Supreme Court. He says he's going to govern with a mandate, and he does not have those sort of limiting guardrails that he did in his first term. So when he says he's going to do it, take him seriously, take him literally.
Derek, thank you. Derek Wallbank, our senior editor in Singapore, and here with us on set is Stephen Engel, our chief North Asia correspondent. Counting down to the open of trade, 18 minutes away, these Chinese markets are set to rally this Monday morning. This is the China Show. Right, welcome back. Happy Monday morning. 15 minutes to the opening bell in these greater Chinese markets. Some already trading, of course. By the way, it's of course we are headed into a holiday in the U.S. Hence, we're looking at bond futures on your screens. If yields were, if cash markets were trading, yields would be slightly to the upside. Keep in mind that we had a massive rally on Friday in both equities and treasuries, and maybe a reversal of that. S&P futures, bottom of your screens. Going into the open today, a couple of other things we're tracking. Tencent being one of them as well, and A50 futures doing this ahead of the open today. So we are poised for a rally that might have to do maybe with some of these analyst actions that have come out, Bill. And I think some names here, Tencent, I think, was the one that caught my eye, out of Morgan Stanley, raising that, I think, to, oh, there we go, over.
Yeah, Tencent Music's been raised, and that is actually coming from an equal weight, but a price target for the US one, the ADR, is at $13. So you're looking at around a 20% increase from the last price. Wow. Yeah, I mean, it's sort of interesting as well because China Tech, and we're going to be speaking about this at the bottom of the hour, actually we've seen a bit of a slide really, but this is one of the names possibly standing out. CATL, of course, raised to a new ad there, but we do know that they're planning their second listing. The latest on that is that they've been hiring several banks as lead arrangers. They're looking to raise possibly somewhere in the magnitude of $5 billion. And then Blocks Group as well. This is kind of the stock that keeps on giving. But we had that listing recently, and we've just seen more brokerages continuing or analysts continuing to initiate coverage on this stock, but rated a new buy, even though actually it was interesting. Some were saying at the outset of the listing that really the gains could sort of be short-lived because there's not too much business divestment or different pockets of the business. It's really just one theme, and that's toys, right?
It is. And I think that you bring up a very good point here. So among the many things we're tracking this and some of the resistance levels on a technical level as well, there are also lots of expiries, lockup expiries, speaking of IPOs and listings there that Bill was just pointing out there. So among the many other pockets of this market that we're tracking this Monday morning. Apart from that, the question really is what the central banks do, where do rates go? Can this global equity rally continue going into the thick of things in 2025? Joining us to talk us through those key themes is Mozamil Afzal, Global CIO of EFG Asset Management. Good morning, Mozamil. Thank you for joining us on the program. One of the big questions, and I'm hoping we could start on this, is where the Fed and friends go with interest rates this year. Can we still make the assumption that rates will trend lower than higher this year, in your view?
Yes, good morning. Great to be here. So I think the major challenge for the Federal Reserve is going to be the uncertainty that Trump actually brings to their own policy decision-making. Certainly for now, the glide path is possibly, say, 50 basis points of rate cuts as we go through the year. That seems reasonable, certainly to us, at this point in time. But there's a hell of a lot of uncertainty that goes with, obviously, the Trump policies as they come through over the coming 12 months, 18 months or so.
Okay, what does it mean for risk assets, generally speaking? Let's start with equity markets.
Yeah, so I think as we go into 2025, earnings expectations seem quite reasonable, actually an acceleration globally relative to 2024. So that seems to suggest that, we will have this sort of gradual glide path higher. The uncertainty is really around policy. If inflation does pick up because, say, trade policy is far more aggressive than current forecasters think, then clearly we'll start to see P contraction. So even though if you say expect MSCI World earnings are roughly around 12%, a little bit more than that for the full year, you could see then P contraction coming as a result of that uncertainty. And that sort of naturally means that returns are probably going to be in the sort of high single digits to low double digits for the full year.
Does that do anything, do you think, to dent the appeal of AI and the AI theme?
No, I think that remains very, very strong, and earnings expectations remain actually pretty robust. And we already heard earlier this month around Microsoft's spending around AI and servers and so on and so forth. So that remains pretty robust. I think the big question is probably going to come towards the end of this year: is are they going to make a return on those huge investments they're making? At the moment, forecasts are roughly around $300 billion to be spent by the large tech companies on AI servers and chips and so on and so forth. So, are they going to make a return on investment? I think, given the concentration that those companies have in the major indices, that's going to be something that we really need to look at, and really, I guess, in the second half of this year.
And it's really almost I wouldn't say existential question, but it's certainly a massive conundrum for funds and active strategies that really, I guess, in many ways want to outperform, these basic benchmarks because of that concentration. How are you approaching that from a sort of strategic perspective? Do we broaden out the equity rally, or do I continue to lean in because of simply market structure?
Yeah, I think that certainly there's big risks there, and concentration, as we know, basically for the S&P 500 in particular, is basically where it was in the 1960s, and that was pretty much near the peak in terms of concentration. And one naturally just thinks about the returns those companies have made over the last 10, 15 years or so, and they're certainly not repeatable. So then one needs to start thinking about where's the value, if you like, in terms of those companies, the new generation of companies, particularly in the world of AI, who are going to be the new companies that come through. And I think mid-cap in the United States certainly is where I think there's more value in terms of opportunities. And then I think broader outside the United States, where, again, peak concentration in terms of S&P 500 within investors' portfolios. And so we've already seen so far this year that Europe has behaved a lot better than probably people thought at the beginning of the year.
Can you go through something that stood out in your notes, which is the gift of China's slowdown? And this was a really interesting point that you were making about how China's reliance on exports can actually be a beneficiary. And we don't often think about it in that way.
Yeah. So I think there's a couple of things that are really interesting about this particular point, is that China definitely needs to focus on domestic economy. And I think that is really, really important. And it will drive, if you like, economic growth globally if they're able to get that into gear. I'd also add that BRICS has become quite an important development. And I think not many people, commentators, really talk about it. BRICS are now 10 countries and growing. I think Saudi and Turkey are also thinking about joining, as Indonesia did earlier this year. And that represents roughly 60% of the world's population, half of world GDP. And I think as we think about the export market for China, clearly BRICS, and possibly BRICS doing a free trade zone, especially if Trump gets very aggressive, you're going to be pushing a lot of that trade outside of the United States. And that also represents a risk and an opportunity for all those countries, particularly Europe, where BRICS is a very, very large customer.
That's Mozamil Afzal there, Global CIO of EFG Asset Management. And we are counting down to the open here. Equity futures looking like we're going to see a good pop at the open after, of course, this Trump-Xi call into the weekend. But more ahead, this is Bloomberg.
Right, the approach to the first session of the week, as you can see, is a very constructive one for bulls and risk assets out there. So we're up one. This is actually quite a substantial jump. And we're putting this down, of course, to that call that took place late on Friday between President Xi Jinping and President-elect Donald Trump, U.S. President Trump, in 15 hours. We're looking at a rally set to continue and really mirroring what we're seeing across the region today. So the 13,000, there we go, almost flirting with that on the A50 futures contract. More, of course, coming up as we look at the open today, Bill.
Yeah, and also taking a look at some of the specific stocks or sectors. We're tracking aluminium names today because we've seen prices rising to their highest level since late November. There are these signs that we're seeing of rebounding metals demand in China, and economic data showing growth of 5.4% in the final quarter of the year as well. So that's the broader metals complex there, but more ahead with the open. This is Bloomberg. Welcome back. You're watching The China Show. We're counting down to the open of markets. This is really just hours away from President Donald Trump retaking office. That inauguration coming up later today. And that focus really, of course, of not just what Trump's going to be saying, but who's going to be in the crowd. And we know that there's going to be a delegation from China. We know that they had that call on Friday. And you know, the tone of that is also what investors are reacting to today.
And we understand as well that I think the representative for China, that is one of the top officials there, set to attend, or reportedly set to attend, also had a discussion, of course, with his counterpart, J.D. Vance, of course. And we'll certainly unpack that even further later on as well. I think the tone you're getting across these markets because of the call, and we can put that together with the developments on TikTok that is back online today, might be one that is, you know, we're coming off the highs of these tensions very short term, and markets are running with that, as you can see on your screen. So we're looking at a rally across the region this Monday morning, including what you are seeing on the onshore markets, 3,900 in the CSI 300, as you can see on your screens. We're also looking at within this space, look at rebar futures up. That's about 0.7 of 1%. Iron ore is up by 1/4. So that should now take those rallies to about 7, if not 8 days going into the Monday session. Yields are picking up on the 10-year yield, as you can see, 1.68%. Let's have a look at the open in Hong Kong. The 100-day moving average, we have been looking to retest that. We're probably trading right above that with the gains and that gap higher today of about 1.2%. A couple of things here. So I think Tencent, 1.3%, an upgrade out of Morgan Stanley on the ADRs. Not on your screens, but I'll tell you anyway, JD.com was placed on a positive catalyst watch at JP Morgan. Right, other stocks we're tracking today, Jinko Solar, quite a, no pun intended, quite a dim outlook there coming out of the solar company. 98 to 99% guidance here on that drop in net income. I think Air China was up also with some guidance coming through, 160 to 240 million renminbi. And we're looking at the property space, not so much on the back of Vancouver, but of course a big drop on Friday. A couple of things today, Country Gardens back in court on Monday. And apart from other things as well that were, I think Sino-Ocean also had some headlines earlier on. But yeah, that's the open today. It's good if you're long these markets.
It's a really wild call or earnings result from Jinko Solar, but certainly one of the areas that's really being caught in the crosshairs between the US and China. Also, Europe concerns about China possibly flooding the market with these cheap products. But let's get more because, of course, it is the day that Donald Trump is taking office. We've got our Asia Equities reporter Charlotte Yang with us in studio. And you've been watching the Hang Seng Tech Gauge in particular, looking at maybe the low volatility, lack of conviction. How's that being expressed right now?
Yeah, so based on options data tied to this gauge that tracks a lot of the Chinese tech companies listed in Hong Kong, we're seeing that the key term for investor sentiment really is wait and see. So give you some data points. So the cost of protecting against swings in the Hang Seng Tech Index is now hovering around a 4-month low relative to the broader Hang Seng Index. And also at the same time, the number of total options outstanding on the gauge, which is in other words open interest, has fell to the lowest since July 2023 at the most recent expiration by year end. So I think the reason why traders are not willing to make any outsized bet at this moment is because they feel like we really need to see a bit more in terms of what Trump will do in his policies and also what China will do in response. And the size and scope was the China stimulus efforts that are expected, we get more sense of that in March. And it was, if we look a bit forward, looking at the 1 month implied volatility for Hang Seng Index, the spread of that with the Hang Seng Index has also failed. So basically, at the moment, we're seeing a lack of demand for expressing any directional view on this gauge because of the lack of clarity.
Now, just to, I think the event, of course, today, to your point, is we're waiting for a catalyst and clarity here on Donald Trump. And you're one of the authors of this report here and this story, the trader's guide to navigating what this means for the Asia Pacific. What are some of the key highlights here and the key sectors to watch? Yeah,
so basically, traders in Asia, everybody's waiting for what Trump is going to do, especially in the first 100 days of his administration. And, as everybody knows, whatever Trump says, that could move the market. But there are a few particular things people are watching. I think the sector on top of the list are tech. We have the China-U.S. tensions in that front. And in China, you're seeing a lot of the chip-making stocks that are already, rallying ahead of, Trump. And the logic for that is that China might, boost the efforts to be more self-reliant in technology. But on the other hand, you have those large caps in Asia, such as Samsung and TSMC. Their China sales could be under spotlight if we see, Trump hardening a stance on China. But then on the other side, traders also bracing for the scenario which he walks back a little bit because his first administration, tech he didn't take that restrictive a stance compared to Biden. And also EV and batteries are another thing that people are watching. China makers are more resilient because they don't really sell to the U.S. But the Korean battery makers, they are more in focus now. And there are also pockets of opportunities we see, in India, such as, and also in Korea, shipbuilders that could be potential beneficiaries depending on Trump's policy.
Charlotte Yang, there we go. On your screens, you can see her name there along with others from her team, the Trader's Guide here to navigating this potential or ongoing trade war with the Asia Pacific. All right, let's get to some other stories we're tracking here this Monday morning. A long-delayed ceasefire in Gaza is taking hold, with Hamas releasing the first of 33 hostages. 3 Israeli women were united with family members on Sunday and taken for medical checks in hospital. Now, Israel has also released 90 Palestinian prisoners as part of the truce agreement, including 69 women and 21 men. Egypt says at least 330 aid trucks have already entered the Gaza Strip under the ceasefire. A South Korean court has issued a fresh warrant to formally detain impeached President Yoon Suk-yeol it allows investigators to keep him in custody for up to 20 days as they look into criminal allegations over his martial law declaration. Now, if charged within that period, Yoon will stand trial and can be detained for up to 6 months. Now, China's military says it conducted naval and air combat readiness patrols in the South China Sea on Friday and also on Saturday. A statement by the Southern Theater Command did not specify exactly where the patrols happened. Now, on Friday, the Philippine Navy said it was holding drills near a disputed shoal where a large Chinese vessel had been seen.
Well, as global corporate and political leaders embrace Donald Trump's return to power, many appear to be abandoning some of their previous ideals about equality, diversity and climate change. And nowhere is this more obvious than at the WEF getting underway in Davos. Let's bring in Bloomberg's news desk editor, Jill Desis. And Jill, I think the title of this is really telling. Were you lying? The great CEO flip-flop over Trump hits Davos. But I think of the sort of one of the questions I had out of it is this people just sort of revealing their true colours, and they were always closely more aligned to that way of thinking, or are they really doing an about turn here?
Yeah, I mean, that's really the question, right? You're looking at, this format for Davos. Traditionally, you've really seen over the past several years a lot more progressive corporate ideals really presented here front and center, whether that be, diversity and inclusion initiatives, whether that be climate change goals. And a lot of that, you're seeing a pretty abrupt, about turn here. We spoke for this story with Lloyd Blankfein, the former Goldman Sachs head, and he was comparing it almost to when newspapers in 1815 changed their tune when Napoleon returned after his exile and just kind of like completely reversed course there. So yes, that's certainly the big question. One thing we're kind of looking at here is maybe that for some executives, you look at, for example, Facebook's Mark Zuckerberg, he's really kind of come out swinging in terms of reversing some of those initiatives, those more progressive initiatives that his company has sort of instituted over the last several years. Maybe that feels a little bit more like, reflecting maybe what he ultimately wants to accomplish with his company. But I think for a lot of others, it's really difficult to see. The only really kind of connecting thread here seems to be that a lot of these corporates are saying, look, this is the incoming U.S. administration with Trump, and we want to sort of get in and protect our investments and sort of grow that.
It is. I mean, it should be, I think, in many ways unsurprising that CEOs eventually take the pragmatic approach. It is the reality that they are sort of going to operate in these next few years or so. Should we expect more of them to come in line with Donald Trump and his vision of the world these next, 4 years or so?
Well, we've already kind of seen a little bit of a shift there, right? I mean, you can compare to 2017 when Trump was coming into office the very first time around. There was a bit of a haphazard approach there. I mean, I recall some of his roundtables with CEOs felt a bit awkward. I think the United Technologies CEO was at one time sort of just left out in the cold because he wasn't on an invite list or something like that. This time around, it does seem like you're seeing a lot of CEOs become a lot more gung-ho about sort of getting in with the Trump administration. We're seeing a lot actually attend his inauguration. So you've had confirmations not just from Elon Musk, but also from Mark Zuckerberg, Jeff Bezos. So, I mean, it really does seem like that corporate class has looked at the Trump administration and said, he's the president-elect, soon to be within the next several hours, president of the United States. We kind of want to get in and make sure that, we're aligned with the administration, at least on some things, or we're figuring out how to work forward with them, particularly when Trump has kind of, signaled all of these really, really big sort of earth-shaking, populist approaches to dealing with trade and economics and such.
Jill, fantastic. Jill Desis there, our Bloomberg News desk editor on today's Big Take. You can read all about that, by the way, Big Take on your terminal if you're a client or also on Bloomberg.com. I love the first line of the story. It's really money in many, many ways. Where they're gathered over the Swiss Alps, where CEOs flock each January to mingle, be rich, and think very deep thoughts. Here's a flavor of some power brokers we'll be talking to throughout the course of this week. As you can see on your screens, the IMF is joining us, OpenAI. The Argentinian president is also coming on, as well as NATO and also BlackRock. So, yeah, stay tuned for a ton of hopefully very deep interviews coming through across programming here on Bloomberg Television these next few days or so. Plenty more ahead. This is The China Show. Good Monday morning. Welcome back first to the China Show. If you're long on tech, good on you. So some substantial gains going into the first half hour of trade here. So JD.com, I think, was added to this JP Morgan list. It's number one. Tencent got an upgrade from Morgan Stanley. Plus, of course, broadly, these tailwinds coming through really showing up in a lot of these large cap Chinese tech names at the open today. 1.6% to the upside here.
Yeah, and possibly feeding into that as well as one of the top stories this morning. That's TikTok, that's starting to restore its services in the US after briefly going dark over the weekend. That's after President-elect Donald Trump said he would halt enforcement of a law that requires Chinese parent company ByteDance to sell the app. He says the firm will get another 3 months to find a buyer. Our next guest leads a company that's focused on the international expansion of Chinese companies. Let's bring in Chris Pereira, CEO of Impact. So, Chris, thanks so much for joining us in studio this morning, because we are usually based in Shenzhen. Yeah. Talk to us about the conversations that you're having with the companies that you work with, and how they're also looking at what exactly happens with TikTok in the US.
Sure. Yeah, thanks for having me, and good to see you guys in person today. So I've been in China for 20 years. My company helps specifically Chinese companies with their business expansion overseas. We've, over the last few years, helped over 300 companies do that. And what we're seeing, I've said for the last few months, actually, that how the U.S. treats TikTok, what Trump's decision on TikTok will be a litmus test for 2025 and where we see U.S.-China relations in general. So first of all, it looks like a mixed bag, on and off with TikTok, the TikTok ban. But I'm seeing some positive signals in terms of where TikTok's headed into 2025. Looks like Trump is leaning towards supporting their operations in the U.S. So given that, I'm personally optimistic about U.S.-China moving forward. Not that there won't be tariffs, not that there won't be challenges, but I'm seeing that a Trump presidency will give some certainty to the market. And I think the U.S.-China relationship and Chinese companies aren't asking for a super friendly relationship. I think they're looking for certainty and what are the rules in the U.S. If we know what the rules are, then we can follow them and we can do business together.
Right. And what you mentioned 300 companies, so I mean, this might risk generalizing some of the trends you're seeing, but what do you find is the most common reasons why Chinese companies expand abroad? Is it the domestic economy? Is it geopolitics? Or is it simply just, we have to look for growth somewhere else?
No, it's a great question. And many people, if you ask them in China, why are you going overseas, they might say the challenges and the pressure in China is too great, we have to go overseas. I actually have a bit of a different view on that. Chinese companies that are able to go overseas are actually the winners in the China market, and they're actually competitive overseas. So it's not that they're escaping China, it's actually they're expanding to Europe, to North America. Depending on the industry, we work with tech, biotech, new energy, and also some restaurant chains going to different places around the world. The ones that go overseas are the competitive ones. And I think that's something that's interesting for the Trump presidency to look at, is why does China have so many competitive and innovative companies? Innovation comes from market competition, in my opinion. So the competition in places like Shenzhen, in Hong Kong, these companies are going overseas and competing because they have a very strong innovative base. And I think that's why they're going overseas.
And when they do go abroad, what are the biggest challenges that companies come back to you with? Is it local cultures being different, or is it trying to boost their brand awareness? What are the biggest challenges that they actually face?
Gosh, the number one challenge in 2025, 2024, 2023 for Chinese companies is trust. The product that they're offering these days, I mean, look at TikTok. TikTok was killing in the market. They're number one in social media. Look at Huawei a few years ago. They're great in almost number one in cell phones. They were number one for a month before they really got cracked down on, right? So these companies have a great product, great price, great technology. What they lack overseas is a basis in trust relationships. So what I give when we consult for our companies, we give them strong advice to focus on your mission, your values. You need to give back to the local community. So in 2025, why I'm really optimistic about Chinese companies overseas is I'm seeing a doubling down on localization, hiring local, giving back locally, working with charities locally. Whether it's in tech or biotech energy, I'm seeing Chinese companies are realizing, hey, you need to have friends locally. It's not just about export or trade, sending things overseas like it was 30 years ago. You need to have a local presence and care about the local market.
And do you feel that, or what would your advice be? I think this might have to do specifically with Chinese companies entering a market like the U.S., which is a strategic rival, for example. Do you feel that Chinese companies need to distance themselves in some ways from their Chinese roots? And I'm wondering, to your point on the trust issue, what part of that goes into that?
I always tell our clients to not do that, actually. First of all, it's impossible to hide where you're from. And, even TikTok, which is namely based in Singapore, everyone knows that their parent company is Douyin in China, ByteDance, right? So I think the number one thing isn't where you're from. In theory, in the U.S., they don't care. You should be treated equally no matter where you're from. If you're from Canada, I'm from Canada. You're from the U.S., you're from North Korea, from China. If you're operating in the U.S., if you follow the rules, in theory, you should be able to operate and compete in the market fairly. So I would ask Chinese companies not to hide their background. What they need to do is build more connection locally. So if you're from China, but you're based in New York, you need to care about the New York economy. You need to care about what New Yorkers care about and have your finger on the pulse of that in the market. So I think it's more about localization than hiding where you're from.
Building brand awareness, though, that's quite a challenge. Are there any companies that stand out to you right now from China that you think are doing a really good job at expanding and building that brand awareness and that trust in an overseas market?
Yeah, I can name two in two different industries that I think I'm really looking at recently. First is TCL, a really big company. Number two in terms of TV sales in the U.S. market. I was at CES last week in Las Vegas, and every badge in the world's largest consumer tech event, largest in the U.S., largest in the world, every person's badge has TCL's name on it in the U.S. So the TCL is really doing great things in the market there. Another industry, restaurants, something that I haven't seen in the news too much, but apart from tech, apart from new energy and biotech, restaurant chains are coming overseas, including things like the coffee chain Luckin Coffee. I've seen initial moves that they're looking to enter the U.S. market. Already in the market is another company that does Chinese hamburgers, in Chinese xishaoye, Bing's, and they already have something like 20 stores in the U.S. and Canada. They're also doing great. Everyone loves Chinese food. I don't think we can have a national security crackdown on restaurant chains, at least not yet, right?
Well, we'll see. The night is young. We saw that with Tencent, and Dungeons and Dragons a few weeks ago. Just to clarify, these are the companies. You work with these companies?
We work with those companies, yes.
Okay, just for fair disclosure here. Looking at, are these more normally just B2C companies, for example, or are there lots of opportunities within the sort of industrial side, business to business, increasing capacity outside China?
That's such a great question. Actually, 80% of our clients are B2B focused companies overseas. And I mentioned the importance of trust. The more B2B your business is, the more important trust is versus product. So when you're selling a consumer product, maybe you're on Amazon, you used to be on TikTok, you're selling online, a consumer can make a quick decision, you're going to spend $20, it's not that big of a deal. But if you're working on a business deal that's $1 million, $10 million, $100 million, trust is more important than the actual product. So, and the B2B business, as I'm sure you know, is multiple times larger than the B2C business globally. So B2B is actually where the business is, where China overseas.
Last question on, again, going back to TikTok, but one of the most interesting dynamics out of it as well has been with these so-called TikTok refugees that are finding homes in places like Xiaohongshu or in Lemonade, that's also owned by ByteDance. But what has been the reaction within China, and do you think that there's sort of a level of caution maybe attached to this, because there is that sort of thought on the back of your head, okay, if they're so successful, maybe they also get caught in the crosshairs? Yeah,
I'm seeing the U.S. play a game of whack-a-mole these days that, okay, TikTok, we're cracking down on you, everyone moves to Xiaohongshu. I think this is a function of competition. So I don't think Xiaohongshu will replace Western social media outlets. I think it's an interesting segue from an unintended consequence from cracking down on TikTok. But what it does tell me is there's, in every industry, competitive Chinese companies expanding overseas, and banning companies, blocking competition is not a long-term strategy for the U.S. I think the U.S. needs to find a way to compete fairly in a win-win way between China and the U.S. And this whack-a-mole game will not end if they don't find a way to work with China.
Chris, fantastic to speak with you. Let's do
Thank you
this
so
again.
much.
Thank you for taking the time to come in. Chris Pereira there, CEO of Impact. And yeah, by the way, we'll have more on the upcoming White House and what that means really for business and geopolitics coming up the next hour of the China Show. On your screens, a roundtable, deep dive roundtable between, well, arguably, of course, the two sides of the same fence. Joining us on those times on your screens. Plenty more ahead here on the China Show. Right, welcome back. Just a quick run through across some of the big movers in these markets. And as you can see, some of these red note related stocks. Well, actually, no. These are some of the Taiwan related travel stocks. Okay, no. Back to the red note related stocks here. Down on the back of this pledge here to delay the TikTok ban. This is a story, by the way, that changes literally by the day. In case you missed it earlier on, that glimpse that you caught, Taiwan related stocks on the back of this report of Shanghai Group Travel. These are, of course, listings over in Taiwan. Formosa International Hotels, as you can see on your screens, up about 1%. Broadly, cash markets are off to a fantastic start this Monday morning. A rally taking place in China and elsewhere in the region. Plenty more ahead. This is Bloomberg.
Welcome back to the China Show. Taking a look at the Hang Seng half an hour into the session. We're on track for a fifth day of gains, but it's certainly a very positive mood across Chinese equities this morning. And part of that, of course, is being driven by what we saw in the Golden Dragon Index on Friday, but specifically the call between President Xi and incoming Trump. Yeah, and it seems that, I think on the Chinese side of things, you are getting I guess, an open hand, really an extension of to improve the relations between the two. And I think that's really one of the views as well from Einar Tangen, who'll be joining us, by the way, at the bottom of this hour to talk us to the Chinese side and what the view is on the ground as we, as the world gets geared up for a second term from Donald Trump. We're looking also, and maybe separately, right? So you are getting risk assets on the way up. These are typically the names that tend to lead these rallies. On top of that, also word and reports here out of that there was a meeting that took place alongside one of the key drivers in equity markets in China of late, which is really buybacks, right? And I think we had a regulatory interview among related bodies and including some of the firms involved. 5% to the upside in Alibaba. Yeah, there we go on this relending tool for the share buybacks. The story across Asia-Pacific is this. So apart from what's happening in China, obviously, gains just about across the board, up 1% on the regional benchmark. Nikkei's up 1.5%. Keep in mind, of course, the U.S. markets are shut for a holiday on Monday, but it's going to be a fairly busy week. When you look at the calendar, and I think we're bookended by the end of this week with a BOJ meeting, which when you look at pricing seems all but certain of a move, and is there room there to fade? That, I guess, is the short-term question at this point in time. Yeah, as you said, it is a really busy week because it's quite interesting when you've got Davos that's kicking off and the Trump inauguration taking place at the same time. We were just speaking in the last hour with Jill Deesis about this sort of flip-flop we're seeing with people previously backing ideas around diversity, inclusion, ESG measures. They now seem to be really shifting away from that and aligning with Trump's way of thinking. Central bank decisions on tap. You've got one in Malaysia, of course, that big countdown, as you said, to what happens in Japan. Also, December CPI figures, and we've got the Korean GDP figures as well. But, of course, all of that really happened ahead of the political unrest that we've seen that also came sort of to a close toward the end of last week. Yeah, lots to sink our teeth into. And not on your screens as well, just to mention, we also have an effective central bank decision over in Singapore. That's on Thursday this week when the MAS sets, of course, their policy, and the greater part of the financial journalism community pretends to understand really how the MAS conducts monetary policy. You know who you are. Very complex. Very complex. Slope and width of the rear, double E. Okay.
let's bring in someone who likely understands how Singapore Monetary Authority conducts their monetary policy. Mahjabeen Zaman, head of FX research at ANZ. We won't talk about Singapore, Mahjabeen, but that's the plug for you. Let's talk about the BOJ. That's the other central bank decision I want to get your thoughts on right now. Virtually priced in a move on Friday. Is that, you think, what we will get from the BOJ end of the week?
Yeah, I think there is a high probability that the BOJ will finally move the trigger on rates. But again, there is always a risk. We are all waiting on Trump agenda policy later today, early morning tomorrow for us. And there is the risk from that is that if that does spark a lot of volatility in FX markets, there could be a risk that BOJ holds back. BOJ has previously mentioned, they're committed not to hike rates when markets are unstable. So that's something we got to think about. But yes, all the data, economic data in Japan that's been coming out fully support a rate hike. If not now, then very soon.
We've got a story out this morning, actually, from our Bloomberg economist, Tara Kimura, talking about the BOJ's challenge in 25 being a stronger, not a weaker yen, but essentially that a stronger yen could flip the script with the central bank looking or girding for these additional rate hikes. What sort of bearing do you think the currency is going to have here?
Look, I think, sure, of course, Bank of Japan normalizing policy surely does point to some element of a stronger yen, which we expect to see over the course of the year. But if we are looking for the dollar yen to move back to long-term ranges of 125, 130, I think that's a far call. They are raising rates in an environment where generally wherever the Fed ends up, for example, we still think Fed, might be cutting, but will be very cautious this year. And rate differentials are still relevant. Carry trade is still going to be relevant, even if Bank of Japan, say, ends up at 1%. So I think that's going to limit to how much strength we will see in dollar yen. We are looking at about a 148 into year end.
Right, and terminal rate, your assumption is 1%. What's the risk to that view? Is there anything that you see could happen this year that might actually change the way we have to think about the BOJ's terminal rate?
Look, I think so far, inflation, wages, all of these drivers in Japan continue to remain pretty strong. We do have Rengo and Shinto negotiations that take place later this year towards Q2. What we are seeing already, Rengo seeking a 5% pay increase for FY25. All of that seems to be supportive. On the growth side of things, when we look at business sentiment, that's, at the strongest since 3 decades. I guess the risk, to your point, is really the economic growth momentum, the exporter side of things. Look, global growth is starting to shift and is starting to look a little bit softer. Now, if, and this is not really our base case, but if we see a slower growth environment in the US, then maybe if Japan export markets are impacted, if there are tariffs that come through, maybe they might hold back in terms of how far they could go with raising rates in that environment. But that's not quite our base case at this moment.
Mahjabeen, stay with us. We just want to bring in Garfield Reynolds, who leads our Markets Live Asia coverage and joining us from Sydney this morning to get more on a sort of another contrarian bet that's also been building in the markets, and that's possibly that the Fed's next move is a hike instead of a cut. But Garfield, talk us through how traders are thinking about this.
Well, traders in the futures markets for interest rate derivatives, they're looking at the same sort of potentially confusing set of possible outcomes that other traders are looking at. So how's that going to impact the Fed's policy decisions? Now, there's been plenty of concern that some of Trump's proposals will lead to a revival in inflation, specifically extra tax cuts, extra spending, and tariffs. And if that happens, the Fed is already at a bit of a delicate stage in the inflation and growth cycle because inflation, yes, it's still slowing, but that slowdown has stalled out a bit. And that's part of why a range of Federal Reserve officials have made it clear they're not likely to cut again when they meet at the end of this month, and that they would consider pausing for a while. So you're joining the dots as a trader and you're saying, well, if they think they might have done enough the way things are now, and we look that there are signs that there's the potential for inflation to come back up, well, then there's a good chance that the Fed, still a small one, but there is a chance the Fed would end up having to raise rates. And some of them look back to the late 1990s where the Fed cut rates ultimately more than it decided it needed to in response to the long-term capital markets turmoil, and then ended up raising rates again because the economy was obviously too strong, and therefore they needed to cool it down to avoid inflation taking off once more. And those signs that I talked about when it comes to growth and inflation, the jobs market was the biggest one, but there are plenty of signs out there for consumer demand and elsewhere that the US economy is going very strongly indeed, far too strongly for rate cuts to make any sense in the short term. And in the longer term, whether a rate hike might make sense, that's an open question.
Garfield, thank you so much. Garfield Randolph, who leads our markets coverage team here in the Asia Pacific, of course, taking us through this contrarian bet that's emerged that the next move from the Fed could be higher. Let's get the thoughts right now from our guest who's still standing by for us, Mahjabeen Zaman, out of ANZ. I mean, Mahjabeen, I remember this time last year, markets had priced, I think it was 7 cuts for 2024. Here we are looking at 2025, and it's 1 at best, 2. Markets tend to overshoot, is my point. What do you? How are you thinking about pricing right now around the Fed rates, and do you think we're fairly priced at the moment?
Look, I think, at this stage, we continue to see 3 Fed cuts this year. We think the market is a little bit too hawkish. And look, with interest rate markets, it's a push and pull game. When the Federal Reserve cut rates by 50 basis points in September, they were concerned about the job markets. The December dot plot, really focused their shift to inflation concerns. So again, it's whether inflation is going to be the real concern or jobs. From our perspective, we do think, yes, tariffs could be inflationary, of course, but looking back at Trump 1.0, we saw a lot of that was really absorbed from FX markets, and that was more transitory, one-off inflation point rather than a persistent inflation increase over a period of time on the back of tariffs. So if that, from that perspective, if we don't think inflation is going to move up significantly higher and remain there, then the other side of things is the job markets. Yes, from the outside, the jobs number looks really strong, looks great, unemployment rate looks low. But when you look deeper, you do see that the private sector side of things looks pretty soft. It's really the government sector, the public sector, which is really supporting that big number that we see every month on non-farm.
So 3 cuts, what would be your sort of thinking around when we see the next one and sort of the pace of those as well? Because to your point, I mean, there is just so much uncertainty and it's really hard to sort of map out exactly how the US economy is going to look under Trump.
That's exactly right. And we're probably at this stage, and of course, we'll have to see how the Trump agenda plays out, but probably 1 every quarter is what we're looking at this stage.
Mahjabeen, with the information we have right now, anything under your coverage, what's the #1 trade you recommend?
Look, I think it's quite interesting to see, with the Trump agenda, sure, we talk about dollar strength. Some of it is already factored in and priced in. I think this resilience, on the dollar side of things is going to remain, but it's going to be different against individual currencies. So we think euro, of course, euro and sterling may be a little bit more under, risk as opposed to Aussie, which is more a services-based economy. So if there are blanket tariffs across on various exports, Australia might be less sensitive to from that element as opposed to Europe, which is more a manufacturing industry, as opposed to Australia.
That's Mahjabeen Zaman, their head of FX research at ANZ. And just as we've been speaking over the past few minutes, we've been actually hearing from the Bank of Korea speaking ahead of fourth quarter GDP figures being released later this week. But the key takeaway from this is that they're saying that the fourth quarter GDP growth is going to be at 0.2. It had been seen at 0.5% earlier. They're also saying that political concerns are going to be slowing GDP growth, and that's important because, of course, all of the political turmoil that kicked off with this martial law decree from the President Yoon early this year, that could really play into the figures moving forward. And we certainly already have seen quite a sizable market reaction. But the Bank of Korea headlines, they're saying 2024 GDP growth is likely to be at 2 to 2.1%. That's lower than estimates. And they're also talking about the political concerns that could be slowing the growth metrics moving forward.
Right, still ahead here on the China Show, another angle to Donald Trump coming back into the White House. His digital token is rattling the cryptocurrency markets and attracting billions of dollars of trading revenue. Did you miss what happened on the weekend? If you did, we're discussing this next. This is Bloomberg.
Well, Dave, as you said, this has really been one of the biggest stories over the weekend, and I saw a lot of attention on this online as well. But a digital token debuted by incoming President Donald Trump has rattled the cryptocurrency market. Trading under the Trump ticker on the Solana blockchain, the token's market value surged to $15 billion before sliding to below $10 billion. That's after Trump's wife, Melania, unveiled a competing coin. Our senior editor, Ryan Weeks, has been looking into this. And Ryan, I mean, it's pretty wild, actually, ahead of a presidential inauguration that we get this coming out as well. But just talk us through exactly what's happened over the past, say, 48 hours or so.
It certainly is wild. It's unprecedented. And so what's happened is that Trump has launched something called a meme coin under the $Trump ticker. So a meme coin is a type of cryptocurrency with questionable intrinsic value, but that can nonetheless go up very rapidly in value if it happens to catch sort of the attention of social media, and similarly can then collapse in value just as quickly if, you know, the attention of those people on X or wherever else turns elsewhere. And that's exactly what happened with Trump's. The Trump token got to about $15 billion in market capitalization in very short order. Then Melania launched her own meme coin. That sort of sapped attention from Trump's token. So that then fell below 10 billion, and Melania's attracted a lot of trading. And then in the wider crypto market, you also saw a little bit of a sell-off just because of the sheer amount of volume flowing into these meme coins.
And how is the crypto industry reacting to this? It's quite a bizarre story, to be honest.
It is bizarre. So, you know, there have been sort of conflicts of interest concerns raised by industry groups in DC about this, because the Trump team, through various entities, I think owns something like 80% of the supply of the main Trump meme coin. That vests over a certain period, so they couldn't sell it all immediately, even if they wanted to. But nevertheless, those concerns have been raised. But then in the crypto industry, where, you know, obviously Trump has a lot of supporters, given the pledges he's made to support the industry on the campaign trail and even after his victory, in the crypto industry, people are also now seemingly raising some concerns, I suppose, about the optics of these meme coin launches. You know, there's sort of a suggestion that some of the goodwill that he's accrued both in DC and globally for his pro-crypto policies may be eroded by this move.
Yeah, that's sort of what I want to understand more about. Do we get any sense of how much his wealth is personally being, you know, impacted by this? Because there's not just this crypto project. Most recently, there was the World Liberty Financial one as well. How much is Trump seemingly benefiting from this?
Yeah, so it's not his first foray into crypto, as you say. He has an NFT project. He has the World Liberty Financial DeFi, decentralized finance project, the purpose of which is still a little bit unclear. And now he has these meme coins. I think the meme coins will attract more attention just because of how rapidly it's possible to accrue wealth through these things. As I said, his team owns something like 80% of the Trump meme coin. That's not to suggest that they're going to immediately sell 80% of it. It unlocks these sort of tokens that they own, unlock over a 3-year period. I think they have something like 20% of the tokens that they already own are unlocked, so they could be sold. Again, that's not to suggest that they will sell them. We'll have to see how that pans out.
Ryan, thank you. Ryan Weeks, our senior editor on the story, the latest story here. From this, of course, and the other major iteration of this is TikTok. And yeah, after a brief few hours or so, that maybe a large part of this generation had to toy with reading books. It's now back online here. So the reprieve actually came after President-elect Trump promised an executive order giving ByteDance 3 more months to find an American buyer for the platform. Stephen Engel, our chief North Asia correspondent, has a grin on his face right now, joining us here to talk us through where are we here on this story.
As the father of a teenage girl, she is not turning to books. Okay, not saying she's not a reader, but they're going to other platforms in the United States, like Xiaohongshu, Red Note, and others as a hedge, obviously. Okay, let me give you in a nutshell what has happened. Obviously, there was the national security law that was passed on a bipartisan bill back in April, and they had until yesterday, essentially, find a U.S. buyer. ByteDance, the parent, had to find a U.S. buyer, or they go dark. And they did go dark as of Saturday night. But then the white knight comes in, Donald Trump. Before his inauguration, he essentially says on day one, which is today, later, or tomorrow, early morning, Hong Kong time, executive order maybe number one of what we're hearing could be 100 executive orders on day one, which could be stretched out over the course of a week, could be essentially two things. Giving TikTok a reprieve of about 90 days, which is allowed as long as there is a buyer identified and there's a process underway, because he needs to go to Congress and get Congress to certify this extension. Secondly, which is not necessarily the way the law was written, he is proposing a joint venture, 50-50. ByteDance, you keep 50, and essentially find another U.S. buyer, 50. But again, even those in his own party, Mike Johnson, the House Speaker, also Tom Cotton, the Senate Intelligence Chair, 2 Republicans are both saying, no, this does not follow the letter of the law. We're not going to allow this. So they're not out of the woods yet. I mean, TikTok is back up, but for how long is the question?
And also the question of why exactly Trump is choosing to back TikTok in this way. As you said, there's a lot of voices within his own team that say they want to have it 100% divested.
Wasn't he the one who brought it up,
Yes,
the concerns in his first term? One thing about Donald Trump you can give him credit for, if you want to give him credit, is that he does assess the situation and maybe changes his mind a few times. So I mean, let's have him explain it. He sees commercial value, and why wipe out the commercial value of something and not benefit from it? Here's what he said.
If you don't approve, they're out of business, they're worth nothing. If you do approve, they're worth like $1 trillion. They're worth some crazy number. So I said, I'll approve, but let the United States of America own 50% of TikTok.
Money talks, guys. I guess that's my summary.
Yeah, I'm still confused how the options on the table are able to solve the national security issue. Anyway, but
that's the big issue. There's already, I guess, negotiating and talking and trying to come up with an equitable solution with Xi Jinping. That's according to the incoming National Security Advisor, Mike Waltz. He says Xi and Trump have talked about it. They're trying to find a way. Yeah, and I think let's keep Steve here. I think we have a graphic that actually shows, Bell, you brought us up before the show started, you know, the number of downloads on the alternative. So they're not turning to books. The other apps and platforms that are still gaining some traction here. Xiaohongshu is Little Red Book.
I think actually, yeah, because if we can show what's happening on the Apple iPhone download store, Xiaohongshu, which we were already tracking, here you can see on the top charts, that's still #1. But it's actually really interesting, I think, because you see Xiaohongshu. Actually, today we're seeing Xiaohongshu linked stocks slumping because you've got this TikTok extension.
Yeah.
But if you take a look at, say, the top 15 there, I mean, there's a number of ones that are social media linked apps. Everyone's trying to find their alternative.
Right.
And then there's actually a huge amount of VPNs that are in the list as well. I can see NordVPN, but there's another one. There's about, say, 3 or 4 in the top 15, just VPNs. So everyone's trying to find their workarounds, even though we know that actually apparently a VPN doesn't work if you're in the US and still trying to use TikTok.
Yes. I mean, everyone is trying to find a workaround versus various different restrictions on broadcast rights around the world, as well as these bans that are coming against various national security exposed apps.
An awfully long period of time to, if it is a national security threat, and it's me just thinking out loud here, you know, to still give it more room, 90 more days for that security threat to remain
Well, the big
live.
question is who would be the buyer? I mean, we've heard Elon Musk. China saying, well, he might be acceptable, but is Elon Musk raising his hand? Who else could possibly want to jump into this, what Trump says, $1 trillion business, but a lot of fraught with risk?
There we go. Steve, thank you so much. Stephen Engel, our chief North Asia correspondent here on the latest on TikTok. Speaking of President-elect Donald Trump.
Yes, that's right. We've got some live shots, him attending a national building museum dinner on the eve, of course, of his inauguration. More ahead. This is Bloomberg. Taking a look at some of the movers today, SK Bioscience is jumping here, extending their gains after the FDA has approved a phase 3 studies plan of a new drug that's being developed alongside Sanofi. So we're seeing that stock gaining. To the downside, though, are some of the China pharma names within mainland trading, and that's because we're hearing that there is concerns over some drugs that have been centrally procured, the quality of those. That's according to reporting from CCTV. We'll have details ahead. This is Bloomberg.
China-U.S. relations really has been the focus of Chinese media editorials over the past few days or so, with the People's Daily calling for a new starting point as far as relations go. Let's bring in Min Lo, our China correspondent, to take us through what we've seen so far across Chinese media, and first really tell us how the call between President Xi and President-elect Trump is being framed.
Yeah, it's an interesting question because I think the way Chinese state media has covered it is quite different from how foreign media has covered it. So there was no mention of TikTok, no mention of fentanyl, really not a lot of focus on any specific issues. There were 5 or 6 paragraphs just talking about, how the two sides should find greater space for cooperation, that they have common interests to better the lives of the people, and they should, renew this longer-term friendship, maintain strategic communication. One thing, though, that was specifically highlighted in the readout was China's stance on Taiwan. Its sovereignty over Taiwan, calling on the U.S. to proceed with caution on that front. So very clearly, a big focus, a big priority for the Chinese government is, number 1, Taiwan, and number 2, trade. That got a line or 2 on that readout as well. And broader, in a bigger picture, it's really about setting the tone, starting this new relationship with the U.S. at the start of Trump's administration on a more positive note. And I should also note as well, the readout mentioned that Trump is looking forward to meet Xi as soon as possible, which confirms some reports we have seen from Wall Street Journal, for example, that Trump is perhaps looking to visit China in his first 100 days in office.
So what did the editorials then say on US-China ties?
Yeah, well, the editorials, I was really struggling to find a good quote for you because they were both very long articles, waxing lyrical about, the progress of U.S.-China relations, a lot of motherhood statements. Again, not a lot of focus on specific issues, but the Global Times editorial, for instance, calling on the U.S. to learn from the previous trade and tech wars to, again, abide by international trade rules and find a mutually beneficial division of labor with China. Again, just calling for more space for cooperation, despite some of the differences they had, saying that that's natural given that the two countries have very different domestic conditions, but still it's imperative that they need to find this common space. And again, sort of extending the olive branch, looking to restart relations with the U.S.
All right, that's our China correspondent there, Min Lo, joining us. And let's get more on the outlook for US-China ties now. Bring in Bonnie Glaser, Managing Director at the Indo-Pacific Program of the German Marshall Fund of the United States. And Bonnie, thanks so much for joining us this morning. We're actually just as well been hearing from President Trump. Elect Trump, but speaking at the National Building Museum in Washington and saying he's going to be signing close to 100 executive orders. So we know he's definitely gearing up to be active and following through on some campaign pledges. But the direction of travel for China in particular, how do you see that shaping up over the next few months?
Well, I think that Trump has indicated that he wants to have a good working relationship with Xi Jinping, but he has made clear that there are Chinese policies that he is dissatisfied with. He said during the campaign that he might impose up to 60% tariffs on China. There was in the confirmation hearing for the nominee for the Treasury Department, Scott Bessent, he made a very interesting statement that indicated that maybe the Trump administration will go back to the phase one trade deal. And there we saw China purchase, I think it was about 67% of what they committed to buy. There are also other aspects of that trade deal which were not implemented concerning the protection of intellectual property. So that's one path where there could be some kind of a deal on trade. Another issue that I think is really at the front of Donald Trump's mind is ending the war in Ukraine. And indeed, he has said that China could play a helpful role. And Ukraine was discussed on the phone call, which Trump had just a few days ago with Xi Jinping, along with, of course, trade, TikTok, the Middle East, and several other issues. But I think ending this war in Ukraine is going to be really, really urgent for Donald Trump.
Bonnie, just hold that thought, and we're going to bring in Einar Tangen, of course, our other guest this hour, part of the conversation really on how the world's most important relationship evolves. A senior fellow at the Taihe Institute. Einar, thank you for taking the time and also speaking with us too. I want to get your thoughts on how significant you think it was or it is that the two actually spoke, President Xi and President-elect Trump, just days ahead of the inauguration.
Well, obviously, it's significant. You want to be talking as opposed to sending tanks at each other. But I mean, there was something in it. I mean, Donald Trump was the one who wanted the phone call. President Xi was happy to receive it. He has an open hand policy towards the United States. But from the chatter I'm getting, Donald Trump has a lot of very ambitious goals. These tariffs, deporting immigrants, depreciating the U.S. dollar. These are all things that are going to add to inflation. And he was elected because 70% of the households in the United States feel that they are living paycheck to paycheck. I don't think they want to have more inflation. So this is going to be a rough road. I imagine that he will start to pivot. But I think with Xi Jinping, he was trying to say, well, I'm going to give you a gift. I'm not going to give you 60% tariffs. I'll only put it at 30% or some sort of graduated tariff plan.
So, Einar, just to follow up on that point, you said that you imagine Trump will pivot in the near future, just given those inflation costs and cost of living pressures in the U.S. In what way would he pivot, do you think, and how would that impact China?
Well, we're about to, and we're already embarking on season 5 of The Apprentice Washington. What his general thing is, he establishes projects, and if it doesn't work.
Okay, I just think we are having a little bit of technical issues trying to get Einar's audio through. We'll try and sort that for you guys. But Bonnie, as we try and figure out the technology behind this as well, let me bring you back in. And we're also trying to figure out, this isn't our first rodeo, let's put it that way. Do you think Donald Trump and his team are as hawkish on China as they sound, or can the bite be actually worse than the bark?
Well, I do think if you look at the individuals that are likely to go into this administration, they are very tough on China, and they have expressed, including Marco Rubio, who is likely to be confirmed as the Secretary of State, Mike Waltz as the National Security Advisor, who of course doesn't need to be confirmed. Both of them have been extremely tough. But ultimately, President-elect Trump will be the one setting the tone and making decisions about the relationship. And I think the trade will be very high on his list. Let's remember, of course, that the beginning of the imposition of restrictions on the flow of technology to China really was started in the Trump administration. And then, of course, the Biden administration inherited the measures that the Trump administration took and built on them. And I think we will see that continue in this Trump administration. They will inherit what the Biden administration has done. We just saw in the last week that President Biden issued a slew of new measures, including AI diffusion and AI infrastructure and other areas. And I think that this is a set of issues that the incoming administration will also continue to want to restrict advanced technology that could give China advantages in the national security realm. And this could include, of course, more on biotech and quantum, and continuing to close the gap on advanced semiconductor technology.
So, Einar, we just heard Bonnie talking there about sort of where we're seeing a lot of that pressure, and it really does come down to trying to restrict China's advancements in advanced technologies like chips and like quantum. What do you think are some sort of easy concessions that Beijing could make to try and appease Trump, to try and as well smooth out the relationship a little?
Well, I think going back to something like the phase one is possible. Obviously, Trump wants, have more things bought from the United States. I don't think it was particularly successful, even though Bonnie was saying that it wasn't completed. The fact is, the pandemic came along and it was very difficult to do trade, period. So going forward, he'll have a shopping list of things he wants China to buy. In terms of technology, this is a strategy that has no end. This idea that you can contain China forever, does that even make sense? The fact is, China has been plowing ahead. They are now forced to develop their chips. And, and Washington is kind of saying, oh, whoa, wait a second, you shouldn't develop your own chips. This is kind of nonsense. You either cut them off and they let them go their own way, or you try to figure out some working together. There's an old adage about how, the prisoner's dilemma, when you have two entities who are trapped on an island. They have to decide whether they're going to cooperate or whether they're going to fight. Obviously, cooperation is beneficial to both.
Bonnie, do you want to respond to that?
Well, I think it's quite clear that China long ago identified the United States as an adversary, even before Donald Trump came to power in 2017. And the United States has been playing catch up. There are some common interests that the U.S. and China share. And in the Biden administration, they have continued to try to work on climate change, and particularly the flow of fentanyl, the chemical precursors that are coming out of China that go to Mexico and then end up killing Americans. And there has been some progress, I think, albeit somewhat limited. But that's an area where I think that if China continues to show goodwill toward the United States, then maybe that will help to tamp down some of the friction, and Trump might then be willing to work together with China on other things. Let's keep in mind, Trump is transactional. He is a deal maker. So yes, there are some deals that could be concluded, but I don't think that we should really expect to have a sort of cooperative, a relationship based on shared interests. These are two countries that I think are in deep structural competition, and in virtually every domain, whether we look at economics, trade, cyber, space, obviously some regional issues like Taiwan, the South China Sea. There are enormous differences, which, in my view, need to be managed. They're not going to be solved. But my sense is that Donald Trump doesn't want to be entangled in a war, and therefore he is going to want to actually bolster U.S. military capability to ensure that Xi Jinping doesn't miscalculate and think that he could try to take Taiwan by force.
Einar, I'll bring you in on that, and the notion that both sides view each other as competition. I got to say, I really get a better sense, or a stronger sense, that the U.S. views China as up-and-coming competition. If you ask the Chinese, and correct me if I'm wrong, the notion is that both of us can coexist and prosper together. Einar, what's the sense that you're getting on that notion in Beijing?
All right, Beijing, as they keep saying, the reason you have that impression is they've said it thousands of times. Every single public announcement talks about win-win, how we can work together, mutual benefit, and this has resonated in the global South and Central Asia. It just doesn't resonate in Washington because Washington believes that it is, entitled to be a hegemon, that it needs to control the world. And I think Bonnie agrees with that view that the U.S. needs to be the primary country in order for, quote, world peace to break out. We haven't seen that. And quite frankly, China has done much better over the last 45 years, both internally in terms of taking care of its people, having a safe environment, having opportunities, et cetera. The U.S. Middle class has declined. And then internationally, I mean, right now with TikTok, this is a case in point. Washington's trying to play whack-a-mole, prevent American people from talking to their Chinese netizens. Why? I mean, it should be, if they're terrible, horrible people, it should be very apparent. So, yeah, I mean, Washington views that they need to be in control of the world. China says, look, you can control what you want, but you can't control us, and you shouldn't try to be controlling the rest of the world. Let's work together. And that's unfortunately not acceptable in D.C.
Bonnie, to Einar's point there, I mean, the U.S. has enjoyed global hegemonic status, particularly since the end of the Cold War. Do you think that more needs to be done in Washington to maybe allow for the rise of China?
Oh, I don't think that the United States is able to nor seeks to block China's rise. I think that the issue is really very specific Chinese behaviors, which are worrisome to the United States. And I think it's obvious to anyone who reads the news, for example, the offensive cyber operations that China has been involved in, where it is now trying to embed into critical infrastructure in the United States. And the United States has pursued actually quite a defensive cyber strategy because it has wanted to avoid escalation. That's just one area. Obviously, China's military, its intimidation and its provocations, its aggression even toward Taiwan and the Philippines. There's such a huge gap between China's win-win rhetoric and its actual deeds. One could easily write, several volumes about that issue. The fact that China's behavior, not only in its own neighborhood, but particularly in areas where it has territorial disputes, over the last several years, has become really, really concerning and aggressive. So I think the goal of the United States really is to convince China to change its behavior. I mean, that has been the goal of the Biden administration. What the Trump administration will do, I don't know. But I do think that there are concerns, not only in the United States, but in countries all around the world, certainly democracies, about how China is trying to change the international order and make it more favorable for authoritarian countries. And the growing close relationship between Xi Jinping and Putin is of great concern, not only to the United States, but also to countries in Europe, where China is supporting Russia's ability to prosecute this war in Ukraine. So I think we have to look at the picture in a more comprehensive way.
I mean, absolutely. I was about to say that I'll probably play the role of pulling us back here. I mean, certainly when we look at politics and we mix in these various touch points, we will eventually, on both sides, on all sides really, come across inconsistencies. It's almost like how you treat your children. You don't treat them equally agnostic of their conditions. But Einar, just on the point that Bonnie was making there, and I think this is very important pushing us forward, the U.S. has maintained that, some of these curbs, for example, are simply aimed as a national security within a framework of national security. Tech curbs, for example. Einar, I'm wondering whether the message that Beijing is receiving on the ground in Beijing, is that still, in your view, mainly to do with technology, national security, or is the message coming across as handicapping its economy?
No, it's just containment policy, and that's been stated by Washington many times. I don't know how you cannot get that message. And quite frankly, Bonnie presents one point of view. I think from China's point of view, they see what the the Pentagon did in the Philippines, spreading false and malicious rumors about Chinese vaccines. They didn't really care that the Philippines was suffering from COVID-19 deaths. They went ahead with it anyways. And when they were confronted, they simply said, oh, anything to get at China. So a lot of things that Bonnie says, you can take it with a grain of salt. I mean, it's the United States that is supporting Israel in its genocide in Gaza. It's the United States that's providing bullets and bombs in Ukraine. China is not. They're very agnostic about it. It's a trade relationship. It is not a defensive relationship. It's the United States who has started wars in Afghanistan, in Iraq, in so many other places. The United States has only been at peace for 17 years out of its 249 years of existence. Those are not coincidences. This is an idea that in America, we believe that we solve our problems by taking things from other people. Donald Trump has just announced that he wants to take over Greenland. He's going to take back the Panama Canal. He's, putting an offer in to take over Canada. These are not about international order. This is about spreading, confusion and trying to take advantage of it. And unfortunately, Donald Trump does represent the history of the United States, and trying to distance yourself from it with this idea that somehow China is evil because they're responding to Washington's attempts to contain it. That's a little bit much.
If there's one sort of major red line, it's Taiwan. Bonnie, you've already mentioned Taiwan. What do you think that the relationship looks like between Washington, Beijing, and Taipei under the new administration?
I think, as I said earlier, that Trump doesn't want a war in the Taiwan Strait, and I certainly think that Beijing does not seek war. They would rather be able to take Taiwan peacefully, or at least what they call peacefully. It's really increasingly through coercive measures. But if that fails, then I think there's growing concern that China might actually use force against Taiwan. We just saw last week there was a revelation of a new capability. Just one example, this is an amphibious landing capability, new ships that would be able to deliver vehicles directly to highways and actually go over the beach where there are very few beaches that are conducive to landings. And so this would really eliminate that problem. It's just one small example of the buildup that is taking place in China to enable it to one day take Taiwan by force. And we know that Xi Jinping has instructed the PLA to have the capability to take Taiwan by 2027. They may not actually meet that goal, but there's growing worry about whether China will use force against Taiwan, and therefore I think you'll continue to see arms sales from the United States to Taiwan to help them to defend themselves. This, of course, is the law of the land in the United States, the Taiwan Relations Act. The U.S. is required to sell defense weapons to Taiwan. And I think that we'll continue to see China conducting massive military exercises against Taiwan to try and warn the president there, President Lai Ching-te, to not pursue independence. He is not doing.
Bonnie, thank you so much for the time. Bonnie Glaser there, and Einar Tangen, of course, joining us really on this, what I imagine will be the first of many roundtables moving forward on this. We didn't even get to talk about Elon Musk that's coming in the headlines right now. More on that headline breaking right now on the other side of this break. This is the China Show.
Taking you to some lines that are crossing the terminal this morning. We are hearing from China's Vice President. This is Han Zheng, who we know is in Washington ahead of the inauguration, the most high-profile attendee from China. Xinhua is reporting that we are hearing that the two sides can strengthen their dialogue. Also, he's been meeting with Musk, who could be willing to deepen investment in China. More ahead.